One of the things that I have been talking about for over a year on this channel is the incredibly high valuations for electric vehicle stocks and the fact that these are manufacturing companies that live by the laws of supply and demand. And it appears that demand is not growing as quickly as supply is in the EV market. And that's going to leave a lot of companies in very difficult financial situations. That came to a head this week when the Wall Street Journal reported that Fisker was preparing to file for bankruptcy. Now, the stock popped on Friday because the company said, hey, actually, we're looking for potential acquirers with legacy automakers. So we don't know exactly what's going on. By the time this video is published, it's very possible that Fisker has filed for bankruptcy or has found a buyer. But I think if you look at this in the lens of all the other electric vehicle manufacturers, this should be a real warning to you that the economics of the auto business are the same as the economics that General Motors, Ford, Stellantis live by. Those are the same things that are going to drive Rivian, Lucid, and Tesla long term. These are not technology companies. These are not companies that are generating 80, 90% margins on their business. There's not the same operating leverage. You don't have the same infinite growth potential. These are fundamentally manufacturing companies. And manufacturing companies need to continually produce products that they can sell at a decent margin to maintain profitability. If demand falls, if competition heats up, if there's a price war, that's all bad for manufacturing companies. And all of those things are happening in the electric vehicle space. So I'm going to dig through exactly what we know about Fisker right now based on current reporting. I'm recording this on Saturday, so this is up to date as of right now, but could change, like I said, by the time this is posted. And this, I think Fisker's news should be a warning specifically to Rivian and Lucid investors, because those are the two investors that I think have a lot of hope about the future, but they need to be really realistic about what's going on in the manufacturing and the free cash flow of their businesses. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Now, this is the article that started all of this. Electric vehicle startup Fisker prepares for possible bankruptcy filing. The company has struggled to grow sales amid stagnant EV demand in the US. Now, there are multiple things happening here. There is stagnant demand, or demand is not growing as quickly as it once was in the electric vehicle space. That's the macro backdrop of what's going on at Fisker. But there's also plenty of problems that are Fisker specific. The company has had challenges bringing its vehicle to market in a timely manner. Sales don't appear to be all that strong because demand just isn't there for a relatively small SUV or sport activity vehicle that's still pretty high priced. And then add to the fact that, and Marquise Brownlee did a video on this that got a ton of attention, millions of views, that it appears that the Fisker vehicle and specifically the software is just not that good. So multiple things adding up here for Fisker. And when you start having financial troubles, then obviously customers are going to ask questions as well. So a lot of things going on here that are specific to Fisker. And these reports extended across the market. So lots of people were reporting that they were at least thinking about bankruptcy or preparing for it. It's not something you just do overnight. But then on Friday, the stock jumped on news that they were talking in strategic talks with a big automaker. Now, this came from Fisker. According to Fisker said that market rumors and speculation, that it doesn't comment on market rumors and speculation, but that Fisker is focused on raising additional capital, engaging in strategic partnership with a large automaker. So this is why there was a little bit of optimism on Friday about Fisker specifically, but you look at their financials and there's just not a lot to like about this company. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. You can see here the biggest problem with Fisker, the company is just burning through cash, and a company can't do this forever. And you get to a certain point where investors are fed up with feeding more money into the company. The stock starts to fall. That makes it not only more difficult to raise money via equity offerings, but also more difficult to raise debt capital. And those are really your two options as a company. But Fisker is not the only company in this situation. Rivian stock has been dropping as well, and the company continues to need to raise capital as it burns billions and billions of dollars. Now, management has said that they can get to the R2 launch, but hasn't really clarified what they're going to do after R2 launches, because they're not going to be able to make enough vehicles in their Normal, Illinois facility to get to positive free cash flow and scale the business from there. So they're going to need to raise money. And if they end up in a situation like Fisker is, where they're building out these facilities and the stock continues to fall, and then suddenly they need to raise a few $1 billion, you're really in a catch-22 position. This is one of the reasons that I've said that Rivian specifically should look for another buyer from another big automaker while they still have a lot of cash on the balance sheet, because it would be much more attractive to buy Rivian today than it maybe would be in a year or 2 years when operations are potentially much worse than they are today. Lucid also in the same boat, where they're burning through billions of dollars in cash. The problem for Lucid is they're making a very expensive vehicle that just doesn't have a big addressable market. Now, they could potentially be acquired by their Saudi investors. I think that's ultimately what a lot of investors are thinking, is that they'll be bailed out by somebody. But that doesn't necessarily have to be the case in the way that they have structured some of their financing deals in the past. They could just go into bankruptcy and be taken over by them anyways. So this is the challenge that all of these companies are currently facing. Even the industry leader like Tesla is having to face falling margins. Gross margins and operating margins are on decline. Now, they're still generating positive free cash flow, but that won't be the case for long if margins continue to decline. And there's evidence that is the case. We saw $5,000 worth of incentives or discounts in China, and there's plenty of demand challenges here in the US as well. This is also in a positive economic environment. And this is the thing that I think a lot of investors need to think about these companies' long-term future, is that if the payoff for one of these electric vehicle makers is 2, 3, 4 years down the road, it's very likely we go through some sort of economic downturn. Now, we have higher interest rates. That obviously puts pressure on some purchases like electric vehicles, but we haven't seen demand for vehicles overall drop all that much. We've just seen supply of ICE vehicles come back online. That has maybe pushed a lot of people who were potentially interested originally in an ICE vehicle into an EV during the pandemic that may have moved back to an ICE vehicle. I know our family was in that situation. So there's just not a clear story from a demand perspective and from a cash flow perspective for all of these companies. And as manufacturers, they need, and Fisker is potentially going to be the first to fall, but I think it might not be the last. Now, the interesting thing with the Fisker situation specifically, and what they said on Friday, was that they were looking for a potential strategic partner, so somebody to buy them. And this is really going to be something to watch, I think, over the next couple of years. So you have the legacy automakers, GM, Ford, Stellantis, Honda, and Toyota. I think those are really the big five to watch. They've all pushed back on some of their electric vehicle development because they don't necessarily see demand for the vehicles that they're going to produce. So they're not going to push that up. I think that's probably the right move for them. But the potential option, as some of these other companies start to struggle, is that you just acquire one of these other companies and move into the electric vehicle market on the cheap that way. I think that could potentially be an attractive option for each of them in a number of different ways. The question is, who would you buy? Now, Fisker specifically, I don't think has a lot to offer any of these companies. Their vehicle design is not all that inspired. It sounds like their software isn't very good, and they're not even manufacturing their own vehicles. So I don't know exactly what you're buying with a company like Fisker. Rivian, on the other hand, could potentially be really attractive. They do have their own manufacturing plant, have done a lot of their own software development work. There's a lot of pieces that you could take from Rivian and then translate that to other vehicles on a similar platform. So that's something where you bring the financial might of a GM or a Ford or Stellantis to them, and that could be really attractive. Lucid, potentially in the same boat. I think it's well understood that their technology is really good, but again, their vehicles are just too expensive. So this is the potential outcome for these electric vehicle companies. Not all of them will survive as public companies. I think that's pretty clear. But the question is, who could survive? And if they can't, who would potentially be acquired or bailed out by somebody else? But as you watch Fisker continue to drop, I think that's just a massive warning to investors. They're not the first. They won't be the last to fail. We have seen this before in the auto industry. It was decades ago, but only a handful of companies survived because they had the scale to actually compete with other automakers. And even in that case, these are not highly valued companies. These are companies that trade for 0.3 times sales, that trade for price to earnings multiples that range from 4 to about 8. These are not companies that demand a premium in the market. And with investors still paying a premium for a lot of these companies, I think there's a lot of downside ahead. But what do you think about EV stocks right now and the Fisker coming out and the news coming out of Fisker? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.